Okay, good morning, guys. I'm Poseidon the first. Yesterday I think I made a little tweet about how to trade imbalances, and I think my illustrations was gotten from Euro USD, right? Okay, so today I'll be using a video to do an illustration for easier assimilation for everybody that automatically read yesterday. I don't think anybody did, but whatever. So just what we have here is structure sweep and continuation, right? So we have price doing this high, and then this low, and then this high. So that's like a complete swing. So for continuation, we need price to like probably sweep this low. So we have price sweeping this low here, confirming this sweep here, and then the buys with the displacement, taking out the recent high that validated this low here. So we have our sweet structure continuation. So what we're looking at for next is the nearest probable entry for price to take out where we're going to enter next to take out this high that we have here. So let me remove all this stuff. Sorry guys, let me just remove the drawings. Right, yeah. So you can see for yourself that price created this OB here, right? A price created this OB here and created this imbalance here. This imbalance is now validating this other block. Now I do not trade that confirmations, right? I do not trade the that confirmations, if I'm not mistaken. I do not trade that confirmations. So I make sure I have at least four confirmations or confluences coming together to make up a single trade. So we have our other block here and our imbalance. So we're practically marking out the 50% of the imbalance. If I was to mark, we should be marking out the 50% of the imbalance from here. So now, so be taking this out. So you guys already know that this is the imbalance. Now we need an inducement. Now you should know that without an inducement, your trade will probably not get to TP, because inducements serve as fuel for your trade. They serve as propellers for your trade, right? So when inducement is taken out, that's when price tend to move smoothly, right? And here we have our inducement here. So we have price create this high, this low, and then take out this structure. So this is our inducement. This is our inducement, this high. Sorry, this low is our inducement. So this is the inducement for the fuel for these zones that we have here, this other block and this imbalance. So if you're trading any of these zones, you should be wary of this low, meaning that this low is your fuel. So we have price do this here. So we have our inducement, right? And this is our imbalance. So what we want from price is for retracement into any of these zones, and then we probably buy. This is just basic structure. The reason why I'm explaining it without much grammar is for those newbies that will probably be watching the video. So okay, so you're here, let's say all this hasn't started happening, like my before after I posted. So let's say all this hasn't started happening, right? All this here hasn't started happening, right? So you have you so from here hasn't started happening, if I'm not mistaken, or here hasn't started happening. So then you've already created. I'm really sorry, guys. I really wish I had like a premium trading video to make things easier. So you've already created your inducement. So what you're waiting for is for price to retrace back to these zones. So if you enter here, you're probably impatient. So you should be waiting for price to get into this zone. Now, Most times people miss out on trades like this. If I'm not mistaken, people miss out on trade like this. Now if you watch, price probably came here and then tagged the imbalance traders, people that trade the imbalance, price tagged them here, and after tagging them, price went high and took out the recent structure, right? Price went high and took out the recent high here. Price took out the recent high here and did something like creating another fake order block, if I'm not mistaken. Yeah, so price created this order OB here. So price created this OB here, and then after taking out this low, so you can see price coming back to sweep them out and then mitigate the order block, then buying them buys, right? So now, how was the entry gotten? Right, so after validating all this stuff, what I had to just do was place my position to place my long position to right here, the 50% of the imbalance, and my stops I used 3.4 pip stop loss, right? This was 3.4 pip stop loss I used, right? So yep, and my take profit was at a swing structure here. So I was probably exiting because of the imbalance that we have here. So this was my exit. So I was exiting at this imbalance here, right? So there you have it. You have price returning back and coming straight for that zone. So this was my exit. I think that was an 11-hour trade. So sorry. So lucky for me, yeah, I think. So what I used was a cheap rip stop loss. So you can practically see price, right, returning back to this zone, tagging in. Both the imbalance traders and the other block traders were tagged in on this trade, and you have them exiting. Some exited here, but I think it's safe to always exit at recent highs. So when I traded this 50%, I already exited here and had to look for a re-entry and bought price higher. So that's not the whole essence of this. So this was just for yesterday. I had to explain today's own trade. Today's own trade. Now, price did the same thing, rinse and repeat, if I'm not mistaken. So you have price creating. First off, we have this low here, and then you see price creating this other block. And you see price creating this other block here, right? Which will be mitigated anytime soon. Right? Okay. Now you will probably hear when this trade started happening. So what are you looking for next? You're looking for confirmations to enter this trade. Now this other block is valid because it's left an imbalance in price. Left an imbalance in price, which we can all see here. So with this imbalance left in price, so if you were here, first off, I want to trade this trade. I want to trade this trade. Like I told you guys, I need four confirmations, right, to validate a trade. So number one is this OB that we have here, validating this swing, and then the next thing we have our imbalance here. We have our imbalance. So we're probably marking out the 50% of the imbalance. So I'll mark out the 50% of the imbalance, which is here, right? 50% of the imbalance, which is here, and let me take this off. So with this, I've gotten confirmation one, confirmation two. So I'm still left with two more confluences to validate this. So my third confluence is going to be my inducement, because if I don't have inducement, I'm not trading, right? So as you can see, price created an inducement on the 5 minutes time frame. Yeah, so as you can see, price came back here. Now price took out this low, price took out this low and left us with our supply zone. The reason why I'm making this all termed without much grammars and everything is for the sake of the newbies that will be watching. So please just pay close attention. So we have our supply zone here. So wherever we are doing, we are trading from here to here, right? So I'm normally I'm supposed to exit at the highs. I'm supposed to exit at the high, but I'm not doing that today. So I'm exiting at this zone because I can see that there's a strong supply here. There's a strong supply here. So this is our inducement here. Price took out this high. Price took out this high. So price took out that high. Remember, if that high wasn't taken out, the inducement is not valid. The inducement is practically not valid. So price took out this high, engineering liquidity. So telling, like, practically giving people the impression that there will be more buys. Practically giving people the impression that there will be more buys in the market. So you have this high, this low here, and then this break. So most people will be practically waiting for price. You can also see this. It created like this kind of an inducement here, and then before continuing the trend. And most people practically waiting for price to get back here, and then they buy price high, you get. But for keepsake, you should know that this is an inducement for this discount zone that we have here. Now I've gotten my inducement, so I've gotten my confirmation A. I've gotten my confirmation A, so this is my B confirmation. Now we have this breakout here. This breakout here. This is my breakout. This breakout that we have here. And funny enough, this breakout now correlates with our 50% of our zone, right? This correlated with 50% of our zone with the consequent encroachment, or whatever you guys call it, CE. Yeah. So that makes it a valid entry. This zone now becomes a valid entry. Now, I told you guys I need four. I've gotten one, I've gotten imbalance two, I've gotten breakout three, and then I've gotten four inducements. So practically everything is safe to enter, but I won't yet still enter the trade because I'll be looking for what we call valid entry confirmations, right? So with my RTO or my Fibonacci 2, practically zone in from here. Now from here all the way here. Remember that if I'm entering, sorry, remember that if I'm entering from here, my stop loss will be practically below here, right? So my stop loss will be here, below this zone here, slightly below, but it's too high for me, so I probably use a 3 pip stop loss. I'll probably use a 3 pip stop loss or 3.4 max stop loss, right? But 3 pip is actually okay for me. So then let's get our Fibonacci 2 and check how valid this zone we are looking at, how valid it is, this entry position that we have here. So with our Fibonacci 2, we mark out from here all the way to the high, which is this, right? So this is our high. So now this now gives me a strong validation that everything is safe and good to go. So we have our golden zone correlating with the 50% of our imbalance, the breaker, and our golden zone. So everything is now in place. Everything is now in place. So we have our GZ golden zone. Forgive me guys if this video comes and it's not kind of like understandable. I promise with time I'll probably make it more understandable for everybody. Get so okay, so we have our golden zone here. So what do I need next? I have to now place my entry. So with our golden zone correlating with our breaker and our imbalance, we then have to place our position to there. Let's take it from here. Remember this high that was broken out impulsively, and then my 3 pip stop loss. at 3 pips stop loss. Yep, 3 pips. And my exits at this zone here, this zone here. Yeah, so this is my exit, right? Always make sure it's just 10 pips. Sorry, 10 RR trade. So this is my exit. So let's take all this off. So we have our entry from here and then our exit here. So then price returns back. So we have price doing something like this, returning back to the zone, getting us tagged. And as you can see, price moves straight to our take profits here. And then we have ourselves a 10 RR trade. So we've gotten ourselves a 10 RR trade, and then we've exited and we're waiting for price to balance again and continue. So sorry, we have 3 pips stops marks. That's a 3 pip stop loss marks that we use, and our take profit is 10 RR up here. So that's about how this entry came about. Yeah, that's about how the entry came about. Now a lot of people will be waiting for this other block to get mitigated, and price will probably leave them here and then straight to take profit, right? Straight to take profit. So this was the validation of this zone. So we have this here. So what do we have here? We have imbalance plus our breaker, right? Plus our return to order equals to equals our entry confluence. Sorry, it's not supposed to be capitalized. Our entry confluence, confluences. Let's put confluences. So we have 3 confirmations here that validated our entry confluence, right? So there you have it. So if you see price doing something like this, if you see price doing something like this, next time when you see price do something like this here, when you see price do something like this here, right, this breakout here, so just make sure you just measure everything out, use your Fibonacci, your imbalance, and then this breakout. So just always make sure that price correlates with everything you are buying with. I think that should be about it. I hope you guys learned something, anything at all. This is just basic market structure. It's not like it's something that's like, it's just basic TA. It's not like it's something that's huge in the market, or it's like a big entry model or like big grammar or anything. I just have to like simplify it for the sake of everybody that's going to be watching it, right? So later on when we begin to advance, I'll probably be making more videos and using more grammar. Yeah, grammar, that's the word. Using more grammar, right? Using more grammar. So as you can see here, just I think if you read my liquidity trade, I told you guys that indecision candles, right, tend to be good zones, right? This, they tend to be good zones. So as you can see here, this is an indecision candle. So if I'm to be trading it, my SL will be here. Sorry, my TP will be here. So I'm trading from here. This is what I'm trading. This is what I'm trading. This is what I'm exiting rather. This is what I'm exiting. This will be my exit. This will be my exit, right? But I only trade 10 pips stop, 10 RR, right? 10 RR. So that was why the entry was practically there. So you have yourself this. So you've seen the confirmation, your imbalance plus your breaker plus your return to order validated this entry. So whenever you want to make trades, whenever you want to take trades, always make sure that your confluences correlates. If your confluences do not come together to make a good entry positions, you'll be out in losses. And your imbalances should come from higher time frames and your entry from lower time frames. And then your exits should be at the recent nearest supply or demand zones. Just like as you have this, the reason why I exited here was because there was an imbalance on the higher time frame, which I knew would probably send price downwards. And as you can see here, when price got to that zone, price sold down. So price sold down from that zone, and there you have this sells down and then buy, though it's not valid, but then again it is trading. So that was how we got the entry for that trade. So price must be coming from support or resistance zone for you to get valid entries below it. So always follow your candlesticks, follow your entry models, follow whatever you know works for you, but make sure that your confluences are more than one for a trade. Thank you guys for watching. I'm Poseidon the First, and I'll be bringing you guys more educative content. So please turn on your post notifications, like and retweet for your friends to also learn. And see you guys on the next video. Ciao.